Hey everyone, welcome in to another daily editorial here on the KE Report. Chatting with Craig Hemke, going to be focusing on the commodities sector, a lot on the precious metals, but we're also going to talk a little bit about copper as well, as copper is having a good day. Gold, on the other hand, selling off a little bit, but I feel like we've seen this to begin some of the weeks recently where gold is down, but you look at something like silver, that's not doing a whole lot. That's mostly flat on the day. The stocks, GDX, GDXJ, SIL, the ETFs that follow the gold and silver miners, those are down, but still kind of marginally when you consider where they have been and some of the levels that they are currently at. So, Craig, any sense you can make about today where a lot of markets are fairly flat, but gold, it's selling off a little bit. It's down about 1.5%.
Yeah, it is a little sense of deja vu all over again, right? And that's exactly right. I went back and looked. Beginning on Friday, April 19th, at the COMEX close of 1:30 Eastern, gold began to sell off and continued all through Monday, the 22nd, for a total of about like $65. Big red candle on the chart. And then, let's see, 6 trading days later, beginning on Monday, the 29th, at the COMEX close, and continuing through Tuesday, the 30th, another $55 big red candle. Last week, early in the week, we actually had a big green candle that kind of turned us around and got us moving back higher. Now today, really it's the same pattern, that deja vu all over again. Selling started at the COMEX close back on Friday, has continued all day today. Losses have been about half as much as previous, those other two, about $32, $33. Probably mitigated some because we've had a little bit of a rally in the bond market with lower interest rates and a slightly lower dollar index today. But nonetheless, it is what it is. Price has pulled back 23.40. Looks like it could be and should be support here. If we make back these losses later this week on the inflation news or whatever, the chart's going to start looking like we're just completed a little reverse or inverse head and shoulder pullback. So all in all, deja vu all over again, but it's not the end of the world and might actually prove to be helpful as we go through later into the week.
Yeah, Craig, I think that's a solid point. It's not the end of the world. I don't think anybody should be crying in their beer over $2,300 plus gold prices. And the other thing is that you need to have corrections to bring in new buying to force whatever equity or whatever sector it is higher. It can't just go straight up. So something like this was anticipated by a lot of technicians that we needed to cool our jets a little bit in the gold price. But when you look at a day like today on Monday, where you have that pattern of gold pulling back, to Corey's point in the intro, silver's really not doing much. Neither the gold and silver stocks, they're not falling out of bed, let's say. But copper is having one heck of a good day and has jumped up to some recent highs it hasn't seen in some time, up above 472, 473 a pound. When you see that kind of strength in the other metals and in the mining stocks, even despite gold correcting, does that give you some encouragement that investors are seeing the larger pattern at play here in the commodities?
Well, maybe, and I think another way to look at it is silver being caught. I think of it almost like a tug of war, and today being kind of a microcosm, just a one-day look at that. It doesn't go on every day, but I think to your point about silver not being down today, you got gold down 1.5%, and silver as an investment, still, I guess, kind of a monetary metal, whatever, is pulled down by gold being down. But copper's up 2%. And comfortably, maybe now, finally above $10,000 a ton in London. A lot of banks, like even Goldman Sachs, now shooting for $12,000 a ton, which may maybe 560, 570 a pound in New York. Anyway, you got gold down 1.5%. You got copper up 2%, and silver kind of stuck in the middle because it's a little bit of both metals, right? And unchanged. Let's see if copper continues. That's going to continue to drag silver higher. And as we get later in this week and we get some of this inflation data, which might come in a little lighter than what people are fearing, gold could easily come rushing right back. And if copper maintains its strength, we could be looking at $29 silver pretty quick.
Craig, how do you carry this over then to the U.S. economy, even to the global economy, where, look, demand a lot for precious metals has been out of the East, and economies broadly have done better than I think a lot of commentators thought they would over the last couple years. Now we're finally starting to see copper pick up, which could be a gauge that, hey, these economies could keep on trucking along here, but precious metals are higher too. So Are either of these actually good for us to use as barometers for the underlying economy, either in the US or globally?
I'm not sure they are, actually, Corey. You can make the case, yeah, lots of things are driving gold, and it's hard to really pin down any one particular thing and say it's more important than the other. I mean, there's just a number of factors that have driven gold up, whatever it is, 15% year to date. But one of those factors almost has to be people looking over the horizon and going, yeah, the Fed's going to start cutting and printing again before too long. And then when gold broke out back on the 1st of March, that was the headlines that day, with Fed Goon Waller talking that way. On the other hand, again, you've got copper, and look at the rally it's on. And from a traditional sense, you might go, well, yeah, gosh, that's all due to expanding global economy. But more and more I read about copper, it's being driven by this kind of potential looming supply shortage, and above ground stocks being depleted. So I'm not sure if we can read much into the strength of the monetary or industrial metals and say it's economically related, other than that idea that this continuing electrification and green economy kind of stuff is prompting a lot of folks to assess what the demand figures for electricity conductors like copper and silver might be in the future, and how, and kind of project that forward. But in terms of just a general economy, I'm not sure you can read much into it.
Well, Craig, I'm going to ask you a question I asked you last week again, just because I keep getting the sense when I look at articles, when I look at investor interest, and when I look at other commodities like oil or nat gas finally popping back, or zinc doing better and aluminum doing better, that maybe there's just more rotation of funds into the commodity sector overall. Do you get that sense at all in talking to people on your side, or just looking at the markets, that maybe there's just more of a focus on real tangible stuff, the goods that make the world go round?
Well, that's probably something to think about. You guys, I don't know if you guys you usually interview Ronnie Sturfula when he puts out his In Gold We Trust book.
Oh, we used to back in the day. I'll reach back out to Ronnie, though.
Yeah, it's got to be due here in a couple of weeks. It seems like it usually comes out in late May. I've seen some of his tweets lately, the last week or two. He's pulling charts out of that thing and putting them on Twitter. And there's quite a few about the historical relative valuation of equities versus commodities, and how we are back to extremes. Now, it's not like we just got there last month. I mean, we've been banging around at extremes, historical extremes now for a couple of years. But I'm sure that'll be a theme of Ronnie's, is that are we now in more of a secular shift away from paper assets into more, hard assets, if you will? Potentially. The other thing that is a little bit surprising about all of this, you mentioned all those commodities you mentioned, Shad, is so many have been rallying in the face of a higher dollar. Dollar index up 3 or 4% year to date. You just wonder, we get into one of those declines of the dollar index, how that might light a further commodity in some, or further fire under some of these commodities.
Craig, what do you make from this, though? That, yes, I think we've all seen that chart where hard assets have drastically underperformed paper assets. And right now, at least in the last few months, we have seen a rotation of money into precious metals, into commodities, but it's not like the broad averages are selling off either. So it does kind of speak to that rotational trade here. How do you balance out markets close to all-time highs, and now commodities also doing well? There seems to be a lot of money out there.
Yeah, and I think that's what you're getting at, Corey. I think that's ultimately the point, is there's just so much cash that equities, and that as an asset class can go up at the same time as commodities, just because, let's focus on the precious metals specifically and opportunities for investment within the precious metal sector. Remember Rick Rule always used to have that guideline or historical precedent that he would discuss how institutionally, globally, the exposure to precious metals and precious metal stocks on average is like 2% of all investable assets, and it's fallen to like 0.5% over the last couple of decades. I mean, just going from 0.5% to 1% in the size and the scope of the overall market cap of all the global markets, it's a lot of cash. So everything else can stay afloat And then you just peel off, this very small percentage of what's in everything else and start putting into commodities, and all of a sudden commodities go up too. So it may be, to the point of your question, that may be exactly it.
Well, and Craig, as far as the precious metal stocks and a lot of these other resource stocks, we have seen some interest in the larger producers and some of the mid-tier producers over the last couple months, and even really over the last year or so. But we haven't seen it trickle down into the more speculative side of the industry. Do you think if we keep getting quarter after quarter of a little bit better earnings like we've seen lately in some of the mining stocks, like maybe if Q1 and Q2 earnings start surprising folks to the upside, that more analysts just notice that, hey, some of these resource companies are actually making money, unlike a lot of the equities and the U.S. general equities? These companies are making some cash. They're generating revenues. Do you think that drives a little more interest in the overall sector, and then some of that filters down into the little guys?
To your first point, yes. And there are certainly, as much as people are frustrated by, Newmont is up 30% from its lows, but it's still down 50% from where it was a couple of years ago. And as much as that frustrates people, there are, and you guys know who there are several, or a handful, or however many it is, some that are juniors that are becoming seniors that are doing just fine, and the charts look great. So if you're selective and you do your homework and you've got some excellent, voices and analysts that can kind of help lead the way, you do quite well. And that's probably continues to be the case. Some of these latest earnings estimates or earnings reports that have come out in the last week, oh my gosh, the stocks actually went up afterwards. What? Wesdome and Kinross, companies like that actually went up 10, 15, 20% in the days that followed good earnings. I didn't know what to make of that. The frustrating part, though, is it has yet to trickle down into an interest into the exploration companies. And I'm as perplexed as anyone as to why that is. You'd have thought gold going to $2,300 would make you think, wow, look, that makes our ounces in the ground, where's this and blah, blah, blah. But then, maybe that doesn't really matter. I know I've got a separately managed account with a little bit of money in it that is focused entirely on the exploration companies, because I'm like, I don't know all these things. I'll let somebody else do it for me. That account by October of last year was down 40% in the 3 years or so since I started it. Here we are now, 6 months later, gold's gone from 1,800 to 2,400, and it's exact same level. It hasn't gone up net over the last 6 months at all. And here gold has moved 30%. So it makes you wonder what will be the trigger. And that's what I don't know. Is too much interest, speculative interest kind of siphoned off in crypto and all that kind of stuff, because you still got to have dollars flowing into the sector looking for a home. Maybe that's it. Maybe the price of gold has to go not to 2,300, but 2,700 or 3,000 before your ounces in the ground are priced at a point where, wow, I got to own some shares of that. I don't know what the answer is yet. I'm just as frustrated as everybody else, sitting back, seeing gold where it is, and not having my exploration companies, move materially, at least not yet.
Yeah, fair enough. You're not alone, especially with all the factors that we are seeing. Silver actually starting to perform better than gold. Some of the majors starting to do better. That money hasn't trickled down. But again, starting at the very top level there, these majors are off of their bottoms just from recently, under a year ago, and then also from a couple years ago, they're off their bottoms. But if you look at the wider range of, let's say, major commodity companies, it seems like the gold and even silver majors, they've lagged, because copper majors, those are doing very well. Many at, I believe, all-time highs. Oil companies, large oil companies, those are doing very well, and the ETF that follows those at all-time highs. It's just weird to see that the gold majors have lagged so much, and we can talk all day about why they have, but we don't really know why investors aren't rushing in. But Craig, when you then are looking at individual stocks, what are you doing? Are you rotating money? Are you buying new companies that maybe haven't rebounded as much? Do you have any insights on what you're trying to do within your portfolio when it comes to the stocks to try to find the ones that are actually doing well?
Yeah, for me personally, I've been kind of trimming and consolidating some. I found that I'd gotten a little too strung out in some of those exploration companies. And I've looked at the ones, that aren't really moving or actually moving down and are raising cash and diluting. And rather than just sit back and hope they come back, I've been actually pairing some of those. And actually people that subscribe to my site, the members actually, I keep track of all this on the site. Anybody can like it. Is that helpful? If you want to know the stocks to avoid, members of my site can look and see what I own. But I have been paring back some of those and moving more into the actual producers, but not just in a blanket sense. I'm trying to look at I mentioned some of the ones I've been buying, Wesdome and Kinross, Alamos is another one. Ones that have good charts. They're actually producing metal, 100,000 ounces a quarter or whatever it is, then you can look at what their costs are and then begin to extrapolate that forward. Like, well, gosh, if gold really does go to $2,500 in the next few months, that sort of thing, rather than sit there with my fingers crossed, waiting for the next $10 million private placement to come across that dilutes my position even more. So I have been shifting. Hopefully there will become a time if I can see some life or some M&A activity or anything to prompt people to get interested in the exploration companies, I'll start buying more again. But for now, I'm going to try to stick with more of a focus on companies that are actually pulling metal out of the ground.
Well, Craig, if we just shift our focus from the micro to the macro, you usually do a good job of looking ahead at what other economic data could move the needle, not just for Fed policy, but economics, what would move the markets, anything on your radar in the near term and maybe into the next couple of weeks that you think warrants attention.
Oh boy, what a week we have. This is what's kind of fun about us recording these things on Mondays now instead of Thursdays, because we can look ahead. It's going to be a very busy week. Right away, tomorrow, Tuesday the 14th, we get the producer price index, 8:30 Eastern. That's going to get a lot of attention. And Jerry Powell is giving a presentation with, I think, somebody from the ECB tomorrow. Not the Countess of the Dark, the head of the ECB, but somebody. I think that's what it is. But anyway, he's speaking tomorrow. All right, so there's some volatility for you. Wednesday brings the CPI in the U.S., Consumer Price Index. That's going to be a big one, along with retail sales. Some more data later in the week is going to get people's attention. Housing starts, the Philly Fed, that kind of stuff. So it should be a very busy and volatile week. And so, again, we've had kind of a tough start to the week with another one of these 24 hours of nonstop selling type patterns. But with all this to come, and man, with people so worried about a resurgence of inflation again, expectations are now, kind of low in that regard, that the inflation, is going to be hotter than expected. Well, if it comes in a little cooler than expected, and it might, we might see gold prices rebound pretty quickly as we go through the week. So everybody keep an eye on those headlines. It's going to be pretty busy.
So when we're keeping an eye on these headlines, do we take them on face value, or do we then just correlate it over to what that means for the Fed? Because, again, the Fed isn't actually going to be meeting until another round of this economic, at least the inflation data comes out. And to your point there, Craig, if inflation comes in lower, then everybody might say, ooh, the Fed might be cutting, and that could drive precious metals higher. But what if the inflation comes in higher? Shouldn't that drive precious metals higher?
Well, that has been kind of a bit of the trend, Corey. We had those couple of reports of hotter than expected CPI, back in March and April. And after initial sell-off, gold turned around and moved up after those headlines. And so you can look at it that way. But I think the way you originally stated is more how I would look at it, as individual events, that those headlines are going to impact the algos that scan the headlines and some of the actual human beings that trade. And they're going to respond to the changes in the bond market, the changes to interest rate cut or hike expectations, how that impacts the dollar, and then that's going to move the metals. I have a sense that just as the market had gotten, I don't know what the word is, optimistic, but far too optimistic at the end of last year in pricing in 7 and 8 rate cuts this year, I think now that we've gotten down to like 0 to 1, I think it's gotten too pessimistic. Powell himself has said, if he sees any significant weakness in the labor market, they won't hesitate to put the inflation fight on the back burner and cut rates. We already got one lower than expected job report last week out of the U.S. If there's more to come, rate cuts will be back on the table as soon as August or September. And gosh, if gold could already move up this far this year fighting lower rate cut expectations, you can just imagine, again, the fire that might be lit under it if the Fed actually starts cutting. So you got to watch all that data for how that might impact those expectations.
Yeah, it still seems like the perfect storm for gold. And even what we are seeing market-wise, price-wise, it seems to be setting up well for gold. But hey, who knows what can happen? Who knows what the Fed and other central banks are going to do with the data that we get almost every week. But again, there's a lot more encouragement for commodities investors broadly, as a lot of commodities have now rebounded and are continuing to run higher and, at worst, consolidate some of the recent gains. Craig, thank you as always for your time. We'll post a link to your website, TF Metals Report, and we'll chat with you again next week. I hope you have a great rest of your week.
Thanks, guys.